Okay, you guys can hear me, right?
Yeah, sure.
Okay. Okay, so yesterday we were talking about the sponsored candle. Today we're going to talk about imbalances. Alright. So basically what imbalances are, they are just places where market did not mitigate. Very, very simple. Uh that's- so call this is day 10. Okay, I'm moving fast. Day 10. 10 notes. Alright, so we'll talk about imbalances today. Okay. I'm sorry about that. Imbalances are areas in price where um in price action where price doesn't mitigate its previous ranges, all right, leading to unequal participation. So take that again. Imbalances are areas in price where price doesn't mitigate its previous ranges, thereby leading to unequal participation. All right. So if you think back to when we just started this showing, when I said one of the reasons for the regulation of price action is to ensure equal participation. All right. Sometimes, if it moves aggressively in one direction without mitigating the previous places, that would cause an imbalance. All right. So that means it moved too quick for everybody to participate. Okay. So I remember that I said mitigation means to touch the previous places, to touch, just to touch it. All right. So basically, if you're looking for imbalances, you're looking for areas that there's quick price action in one direction and one direction alone. So what it looks like is something like this. All right, something like this. Very fast movement and no much movement to the downside. Not really much to the downside. All right, places like this one is more accurate. In fact, you can see how we just rushed down. Zoom in, so you can see that this is just what happened here. Is just selling, no buying at all. All right, if you have some buying, you can see all these pullbacks, pullbacks, pullbacks. But when we have an imbalance, we just have selling. So anybody that wanted to buy in this area, you don't really have much opportunity to buy at all because the market just kept on falling. All right, so it's never got to, or it never slowed down to enable you plan your trade properly. So this is just one-sided market movement, one-sided participation. Nothing really happened for the other side of the market. Okay, so you can see one here. You can see one over here. So it doesn't have to be very very long. It doesn't have to be very very long like this. You can see this place now. If I zoom in here, why did I mark this place as an imbalance? You can see that there is this candle that just went down very fast. All right, so that candle went down very quickly. This one, and this one now came back up into it, but did not touch this previous range that happened here. So on a lower time frame, these three candles that you see here, these three candles, okay, these three candles here. On a lower time frame, what they will look like is something like this. We have downward movement, upward movement, downward movement, upward movement, then downward movement continues. So this upward movement didn't touch this previous week here. Did not touch the previous place over here. Okay, did not touch this previous place over here. So that is what we call an imbalance. Okay, the price did not balance itself out over there. No balancing of price. All right, so that's an imbalance. So it can be long, it can be short, it can be any length. All right, so most times when it's long, people call it a liquidity void. All right, people call it a liquidity void or a void, or I don't know, sha. This is something that is long like this. They call it a liquidity void, and if it's shorter like this, it is very short like this example we have here. We call it a fair value gap. All right, we call it a fair value gap. So once price comes in to fill in that gap, we say that we have fair value or we have fair valuation. So price has come out to balance itself. But in general, both scenarios are called imbalances. All right, they are imbalances in price. So in that area, price was not balanced. It went one-sided without giving the other side of the market a chance to participate. Okay, so later on, we expect price to cover that area. So you can see if you draw to the left, okay, price later came in and touched that previous range before the downward move continued. Okay, so we expect price to come in, mitigate the previous area by touching it, mitigate the previous range by touching it before continuing. It's not every time. Like there's another one here. So it's depending on what you see in the market. There's an order block here that was mitigated, but we've not gotten to that kind of advanced concept. So because of this other block now, we will not expect these ones to be mitigated right now. So we expect the price to continue pushing down. Later on, price may still come back here, but we're never sure of when that will happen. So, like I said here, we expect the price to come back to fill in an imbalance at a later time when we never really know. Okay, so sometimes it may leave an imbalance and keep going. Okay, and it will come back much later or never. So, all right. So that's just it, sha. But most times when price is close to an imbalance, the imbalance acts as a magnet, just like liquidity. All right, just like this place is liquidity now. All right, this place is a liquidity. So it's acting as a magnet for price. When price is down here, it's once it smells that liquidity, it jumps up to take it out before going down. So it acts as a magnet for price as well, an imbalance. price would like to go out and balance it as well. Another example of an imbalance can be when you have a gap between two candles. So let me say this is candle one, and when candle two wanted to open, it did not open here. It did not open here. Instead of opening here, it jumped up a little bit. All right, it jumped up a little bit. So we'll call this area inside here an imbalance. We'll call the area at the middle an imbalance, and we expect price to later come down and fill up that imbalance and remove that inefficiency. And that name for imbalance, um, another name for imbalance is an inefficiency. Inefficiency, liquidity void, liquidity void, fair value gap, fair value gap. Can also call it a gap, just a gap. Okay, see, all right. So there are different names that people might call it. All right. So yes, some people may also call it momentum shift or something like that. But anyway, it's all referring to the same thing basically. All right. So when price experiences speed in one direction and it doesn't go in the other direction to balance it out, we expect price to later come in there and fill it up. All right. We expect price to later come in there, fill it up. Okay. So you can see various examples of imbalance on the charts. You can see various examples of imbalances on the chart. Sometimes, or most times, if you're expecting a retracement, we expect the price to retrace into an imbalance before pausing or stopping. All right. So let me say we have price looking like this. We have price looking like this, and then it creates an imbalance. Okay. If the price starts retracing, okay, and it breaks market structure here, we expect it to at least fill that imbalance. Okay, at least close that imbalance before we continue the downtrend. Okay, so imbalances are good places to continue the trend. All right, so when we end the imbalance, it's a good place to continue the trend. Okay, so sometimes we use 50% of the imbalance, but I will not teach that in the scope of this lesson today. All right, so let's basically go into the chart and try and find some scenarios where price came into filling the imbalance partially or totally. So sometimes the price may not fill in the imbalance totally, all right? May not totally fill it in. Sometimes it will just fill it like halfway. If it fills it halfway, that is enough for us to take a trade, all right? But it's not all the time. Not all the time. It's just in certain scenarios that we expect only halfway covering of the inefficiency. Okay. But let's go and look at what it looks like, sure. Let's go and find what it looks like. Okay, let's find what it looks like. So we have this one here. You can see where price start, it was here, ran up quite fast. Let me zoom in a little bit. Ran up quite fast. Then these candles were a consolidation, so they basically mitigated this previous high here. So this previous high was properly mitigated. Okay, mitigated by these guys. All right, and then after that, after the guy was mitigated, we had a sharp movement to the upside. After we mitigated this high, the price quickly ran up. All right, so we had to come down to mitigate that area before the price ran up. We had to come down to mitigate it. You can see mitigate it, came back to touch it before price now continue going higher. Okay, so imbalances are a good place to look for the end of a retracement. All right, if you search inside here, you can still find a sponsored candle or something like that to buy from. Okay, but right now, the reason why we stopped here is because that's the end of the imbalance, and now there's probably a sponsored candle inside this area that now pushed the price higher. All right, so You can see here as well, we have an imbalance, price moving up sharply, right? We have to come down to meet the downward movement, all right? Mitigate the previous range, cover up that imbalance. Happens a lot of times. We have another sharp movement here, price comes down to fill it in, all right? It happens a lot, all right? So that's why we look for sharp movements during that time I told you guys about sponsored candles. So we have sharp movements here, sharp movements here. We expect price to later come in to fill this place or fill another one that is lower than this place. Okay, so that is what we expect from price later on. So price came down here, okay, took out some liquidity down here, sha, a graph. So we took out some liquidity down there. But anyhow, sha, you can find these imbalances in many situations. You can find them in many situations, and they are very, very nice places to uh sometimes if you can trade a retracement and take profit at the end of a imbalance or a liquidity void or a fair value gap or whatever you want to call it. All right. So that's basically what an imbalance is. An imbalance is when price rushes up, all right, when price rushes up and it has to come down later on. You can see here we have a small imbalance, a small fair value gap. If I zoom in there, if I zoom in there, oh, this chart has reset. Oh my god. That was I looking at. So here now, we have a very tiny imbalance here, very tiny imbalance from here down to here. So price shot up like this, but it still came down, all right, but it did not mitigate all these guys properly. So when we extend it, price may react from this imbalance after filling it in. So after filling the imbalance, you may fill it halfway or you may fill it entirely. Okay. Once price comes down to fill it a little bit, we expect some reaction from there. Okay, expect some reaction from there. So price came and fill it entirely. Okay, we covered it entirely before we saw some movement to the upside. So price later came down sharp to change the trend. But anyhow, that's just the concept of an imbalance. You can see another one here. You can see another one here. Price had to come up and fill in the imbalance there. So that's just basically how it works. Nothing very complex, just very, very simple. Just get the concept. Later on, we start using the concepts in what we are doing. But I think this is one of the simplest concepts to understand. So try and go back to your various homes. Look at the chart and look at where the chart feeling an imbalance and then reacted. Just look for examples in your free time. Just look for examples. Okay. So next thing is liquidity pools. Okay, liquidity pools. So uh, I have liquidity pools. So liquidity pools, liquidity pools are areas in price action where a big bulk of orders reside, and they are great targets because they act to increase the font size of all these things so that you can see a little better. Because they act as magnets for price. They act as magnets because price has to get to these areas to activate certain orders and bring liquidity into the market. Okay, so yes, that's just basically it. Liquidity pools are areas in price action where there is a big bulk of orders and they are great targets because they act as magnets for price. They act as magnets because price has to get to these areas to activate certain orders and bring liquidity into the market. Right? So that's basically what um, liquidity pools are. All right. So we'll go down to this place to check forms of liquidity. All right. Forms of liquidity. Let me just copy all this. Copy. And we're going to paste it in our notes. Forms of liquidity to identify. We have equal highs and equal lows, swing highs and swing lows, recent highs and lows, old highs and old lows. So those are the forms of liquidity that we have in price. Okay, so for you to find them, just know the type. Just look for these types and search for it in your chart. Let me just. I'm not even feeling myself this night. All right, so let's look for first of all, let's look for equal highs and equal lows. So, what is an equal high and an equal lows? What is an equal high and an equal low? An equal high are two highs that are close together in proximity. All right, so they form at the same general area. Okay, so we have we can call it a double top or a double bottom. All right, so let's say we have something like this. Okay, these are equal highs. These two are equal highs. So price will like to come there and take out the liquidity that is there because some people's orders are above that place. Some people may say this is a double top and I would like to sell from here. Okay, so they would like to go there and activate their order. Some people may say this is a strong resistance, I would like to sell from there. Or this is a strong resistance. If price go above it, I want to buy because it has turned to a strong support. So many ideas around it. Okay, so these are equal highs and equal low will be the opposite thing, equal lows. All right, so price may just go and take liquidity and continue. Okay, so in this case we're expecting a reversal or just a continuation in the trend sha. Anyhow it is, can be any of the two. So basically this is liquidity as well. All right, so when we see something like this, these are very good targets for us. These are very good targets for you to take profit. Okay, so now let's look at example of equal highs and equal lows. We should be able to see them very easily. Okay, so the ones that are close in proximity. Let me try and see. We have the one I just saw now. All right, where is it? Okay, we have these guys. Can you guys hear me? Come on, bro. what? Okay.
I will. I will be sweet. See how many students you have.
Hello. Even if I'm giving MTN plenty deals, they are still messing up my network.
Why don't you plug your phone directly to the laptop and allow network access? Use USB Type-C.
Yeah, I
It's
didn't know
faster.
about that. Oh.
Eh?
I didn't know about that.
You know about that? It's faster. Cable connector. Okay. And also waste less battery. When you use your data on. Like you say you are in tech what? What do you call yourself?
I know about it, but I've just not used it. On this my code, I think it's having issues.
Mm-hmm. I thought you were showing yourself. Try the other side. You want? 68 gigabytes over your set limit. Wow. I'm using your hotspot, right?
Wait, just make sure it's charging. That thing they shake. Hello. Can you guys hear me?
Yes, yes, we can hear you.
Please, where did I stop? I
Yeah.
think.
Please share your screen.
Okay, sorry. Where did I stop? What I was saying before MTN struck.
Yeah, you are trying to identify equal highs and equal lows.
Okay. Yes. So equal highs and equal lows. So let's look at. Okay, I assuming that you guys got this part. So these are equal highs and these are equal lows. All right. So if we go into the chart, we'll try and identify them. So if you are buying, if you are in an uptrend now, in an uptrend, okay, if the price later forms equal highs, this and you now buy, say around here, you bought around here, right? You bought. These equal highs are a very good target for your trade. All right, you can just target that place as you take profits and leave the market or leave or close most of your position. All right, so now let's go to the market and look at equal highs. You can see this one here. So there's money resting above these highs. Okay, so you might see traders drawing something like this, and then they will put dollar sign there. All right, so that means that there's money there. All right, so you see like a dollar sign. So they are going to put dollar there, or they will put I symbol. They shall put something there, shall you might see an I symbol. Where's that I? Can't see the I. Oh, they shall put something there, shall. So you can see that when price retraced, that would have been a nice place to take your profits, even though this is your last target or your final target. Okay, but this is a good place to take partials. So once you take the equal highs, that is a good place to take profit. All right. So you can see equal highs here again. You can see equal highs here as well. We have price taking that out too. Okay, taking that out. These are relatively equal lows. Okay, equal lows. Price will come down. See that as liquidity. All right, equal lows. Equal lows. They are close to each other. All right, in price. So price will take those out as liquidity. So if I'm selling, I could target these equal lows as my take profit areas. Okay, so equal lows and equal highs, equal lows and equal highs, equal lows and equal highs are good places to take profit or target. Okay, these are equal lows as well. Okay, these are equal lows as well. So if the trend to change from bullish to bearish, I can easily target this place as one of my take profit targets or my final destination. Okay, so you can see equal lows and highs, equal lows and equal highs, equal lows and equal highs, equal lows and equal highs. So that's that for equal lows and equal highs. So you can see if the equal lows and equal highs, if you have equal highs and you are in an uptrend, the equal high is a very good target. Okay, if you have equal lows and you are in a downtrend, the equal low are a nice target for your trade. So those are liquidity. Liquidity are places that the market is attracted to because there are lots of orders sitting here. So a lot of traders might see this equal highs here and say it's a strong resistance. So they may want to sell when price gets there, or they may want to buy anyone they're trying to do. Okay, so the price will go there for the sellers. Okay, when the price hits that place, they will be selling. All right, so they will be in loss all this while. They may go and jump out of the trade, and the price finally reverses and goes their direction. While for the buyers, they are winning for some time. All right, they are winning for some time until the price just reverses, and then they are swimming in debt. Okay, so that's that for equal lows and equal highs. Okay, so next thing we are going to look at is swing highs and swing lows. Swing highs and swing lows. Okay, so what do I refer to as a swing high? Um, a swing high is the beginning, the high or low of a range. Okay, so let me say we have this range. Okay, we have different ranges forming. Okay, so um, for this price action movement, okay, these are the swing highs. All these guys, swing highs, they are targets for price action. They are my sweet targets to take profits. So all these swing highs, these are swing highs, while the ones that are under it are swing lows. Okay, they are swing lows. They are swing lows. So peradventure, should the price turn around and start coming down, should the price start turning around like this and make a reversal like this, okay, I'll start targeting the other swing lows to take profits. I'll start targeting the other swing lows to take profits. So this it works the same way in a bearish market as well. So swing highs and swing lows are also good places to take profit or good places to target for your trade if they are against the trend. So that means that if we're in an uptrend, you target a swing high. But if the price changes to a downtrend, you target swing lows, previous swing lows. Okay. So you can see uh make this neat. You can see a swing high. Okay, swing high right there. Okay, all these are swing highs. Okay, so if we're buying down here, all these swing highs are good places for us to target for our trade. All these swing highs are good profit targets. All these swing highs. Okay, so those are swing highs. Swing highs. Okay, so we have swing highs here as well. All right, we have swing highs here as well. We'll talk about swing highs later on when we talk about how to identify a valid break of market structure. Okay, so all these swing highs now, let me say, for example, this swing low here. Once price takes it out, I know that the trend has changed to bearish. All right, so how to easily identify a swing high? Most times, a swing high will look like this. Sorry, a swing low will look like this. All right, so it has two lows beside it, two other lows beside it. All right, while the swing high will have two other highs beside it. So they are quite strong. Okay, so Usually when price takes liquidity of one swing high, I expect all the rest on the path to be taken out. So swing highs are usually strong support or strong resistance, but that's not the topic for today, Sha. But usually this is what they look like. You have one high to the left, one high to the right, or one low to the left, one low to the right. So that's swing highs and swing lows. They are good places to take your profit. Okay, good places to take your profit at. All right, so that's basically it. That's basically it. Let me check recent high. Okay, Omo, let me just try and finish up. I'm quite tired. Recent highs and recent lows. Recent highs and recent lows. Okay, so if you are trading, okay, if you are trading. Okay, so let's say you are trading in this uptrend markets. Okay, so your recent highs and your recent lows are the most recent highs and lows that you can see on the chart, and they will act as point of liquidity later on. Okay, so this is what I regard as a recent high. Okay, this one will also count as a recent high for me. Okay, so these guys are potential liquidity points. So right now it might take the recent high because it's an uptrend. It might go ahead to take the recent high, or it might reverse and take the recent lows. So whichever one it takes is usually going to be what will influence my market decision. If it comes down, I may start looking for other reasons to support to see if it is bearish. While if it goes up, I know that the bullish trend is still continuing. So these are recent highs, recent lows. All right. So they have not been tested before. They've not been tested before. So those are your recent highs and recent lows. That is the most recent highs that you can see that have not been tested by price before. Okay, so that's recent highs and recent lows. Okay, so let me say, assuming you were, yeah, I don't have replay on this account. Okay, let me go to the other one. Go to Bitcoin. Okay, so yes, so those are recent highs and recent lows. Okay, so assuming the price action was still somewhere, let me say all these things have not happened yet. Okay, let me say that this is where price was. So let me say that this is where price was. Okay, what I will mark as my recent high will be something like this. Okay, so I can mark this place as my recent high. Okay, and since we are bullish, okay, I'll target the recent highs instead of the recent lows. So this will be my recent low. To be my recent low. Okay, so but since we are bullish, we expect the highs to be taken and the lows to be left out. And this low is even more powerful because it has induced liquidity before. So it induced this guy. So it's a little bit more powerful as a low. So I will not even expect price to come down below it. So I'll be looking to buy and take out the recent high as my point of liquidity. So I'll just look at this place as my point of liquidity. Or let me put dollar sign there. Dollar sign. All right. So I have my dollar sign over there, even though it's looking very small, but I'll say this is my point of liquidity. And when price starts moving, okay, we expect maybe we bought around there now. We will not expect the price to move higher. Okay, put us in some profits, and finally reach the recent high as our take profit. Okay, so this might be my first take profit, or I may close my entire trade here. So basically, that's how it works. All right, that's how recent highs and recent lows work. Let me say, for example, now my buying position may have been here. Just eyeballing this chart now. This might be the supply zone that caused this. So I just buy there, take my profit here. Very simple, very short, but not easy. Okay, so that's basically it for recent highs and recent lows. So let's go back to what we're doing. So that's recent highs and recent lows, sha. Then we have old highs and old lows. These ones are very. I like old highs and old lows because these are what I use when I want to make uh, a lot of money. You understand? So you can just place a long-term trend. A long-term trend. Let me say you can say this is your the old highs and old lows are the old places in the trend. So let me say that this is, let me put it on the 1 hour chart. Okay, 1 hour chart. So the price has been trending higher. Okay, so this will be my old high. This is the old high where the market started falling from. All right, this is my old high. Okay, this is an old low. Okay, this is an old low. Okay, so if I have reasons to believe that this trend is now totally bearish and Bitcoin will start falling down to the soil, all right, if I have reasons to believe that, I have this old low that is very, very far away as my target. So if you have a target that is far away, you can relax some more and just be buying and be selling slowly. You can sell a little bit, sell again, sell again, sell again till you get to the old low. All right. So old lows and old highs are long-term targets. All right. They are long-term targets for you to take your profits. Okay. So as let me assume that this is a buy here. Okay. My old high can be a good target. So you can just buy maybe somewhere here. Maybe you can buy there and trade all the way to the top. Okay, so that will be your final target where you're going to completely leave the market. Okay, you can be taking profits partially, but once you get there, it's advisable to take everything, to close everything. All right, so that's that for old highs and old lows. Okay, so these are old highs and old lows. These are um then the recent high is somewhere here, recent low and recent high, recent recent high over there as well. Okay, so the swing lows and swing highs are this guy is a swing high or was a swing high that was targeted. This guy is also a swing high over here. All right, so um then equal highs and equal lows as well. So that those are the type of liquidity that we have in the marketplace. So we usually draw this liquidity and try and watch price. Try and watch price. What is price going to do? Is price going to take out the liquidity or not? Okay. So this guy, I think he has acted as liquidity. Okay, you know, he has not yet failed. The price has not yet taken that liquidity. It might just be doing a trick now. People might think that this is now bullish. This support has worked out. It might just come and fall out and take that liquidity. So don't trust this kind of thing like that. Even if it looks bullish, don't really trust it. Okay. So yeah, guys, that's just all for liquidity. That's all for liquidity. All right. So um, I will stop here today. I'll stop here today. Tomorrow we are going to do um how the market move between this all the time. Basically, I'm going to try and study how to trade using all these three. Okay. So we call that confluence, using different factors to back the reason or back to create a reason for your trade. So you might say, I have another block at the end of an imbalance and I'll target a liquidity pool for my take profit. So that's what we call confluence. All right. So yeah, that will end to this class, guys. That will end to this class. Do you have any questions before I close the meeting?
No, of course.
Okay.
Excuse CJ, good evening. Sorry, my own question,
Yeah.
sorry, it may be a little bit out of like it's a bit out of what we discussed, but it's still something I'm curious about. That this particular chart you used to explain this, you saw that it's Bitcoin slash Tether.
Yeah.
How I I used to wonder what that actually is, which what does it
Theta is USDT, is a stable coin.
okay,
USDT.
okay, okay, okay.
So there are different.
Okay, just like
It's just like, yeah, it's just like
Bitcoin and
dollar.
US dollars.
It's just like Bitcoin
Okay,
US dollar. So it's just a crypto coin that represents the value of $1 in the crypto market. So there are different
okay,
kinds of USD. There's USDC, USDT, BUSD. There are many. So that's just it. So the name of the company that offers that USDT is Theta. That's their name. So that's
oh,
why, yeah, yeah,
CJ,
yeah,
please, the taking profit that you talked about,
yeah.
how is that done? Like, are we going to close the entire trade manually, or like, I don't know, like taking partial?
Mm.
Actually,
You have it your
yeah, you
MetaTrader
talked
now.
about the taking partial.
Let me say,
Yeah,
let me say for example now. For example, I bought here. Okay. Um, how do I do this? Let me use a good example now. Let me try and use that other chat. Why did I even close it? So MetaTrader has the option. Just if you check MetaTrader, let me assume now that um so this is the concept of taking partials. So as assuming that the market was somewhere, let me go to the back. Um let's say it was somewhere here now. I wanted to buy from there. Okay. Wanted to buy from there. You can see that we have some resistance on our way. So we have this thing that looks like a sponsor candle over here. So that can make price turn
yeah,
around. Okay, that can make price turn around. Okay, there might also be something else here. There might be something else inside that week if you analyze and go on a lower time frame. There may be something else inside that week, but we don't know. That might also act as, or let me not say inside that week. Let's just say that this week is acting as a good target, acting as liquidity, because um these guys are almost like equal highs. So if the price should take out this guy, it's likely going to take out this guy. Okay, so we can say that we want to take profit here, even though this is our final target over here. This is our final target. This is our final target. Where is that line? This is our final target. Okay, so the concept behind it is that we want to, we don't know which time is going to just turn around. It might not reach our final target. If you just buy this trade and be praying to God that it gets to take profit, it might never get there. It might just reach somewhere here and just turn around and take out your stop loss. So we want to um we want to buy and then take profit here. So let me say we bought with 0.5 lot size. Okay, 0.5 lot size. When it hits this zone like this, you can see that this zone is a resistance here. So when it hits this zone, we want to take out 0.2 or 0.1. So we take something for ourselves because it's a way of paying yourself for the work you have already done. So you can take 0.1. Let me say you 0.1 here, you made $10. So you can take partial there. When it gets here as well, you take another partial. Take another partial if it goes up to this place. Okay. So once you can see how we reverse now. It might reverse like that and just go down to the floor. All right. But it has to take profit too. So we take more profit and then we just leave the rest. We can move our stop loss to our entry point so that we will not make any loss at the end of the trade. And then once we get to the top, we will take our final profit. So there are different ways of doing it, sha. The first way is to do it manually. Okay, so if you're a MetaTrader now, if you know that button that they used to close your trade.
Yes, sure. So
Uh-huh.
I mean, the only way to do it is just to be reducing the position size, right?
Yeah,
Or
just be reducing the position size. Once you hit one target, you close part of it and leave the rest to
okay,
the game. Or from the beginning of the trade, you can divide the trade into three. Let me say you have 0.3 lot size that you want to trade with. You can divide it into 3 points that you want to take profit. So one trade will have 0.1, the other one will have 0.1 as well, and the third one too. But they will have different
that
targets.
that that's risky. Like
Is
once
it
the
risky?
the trade didn't even go. Yeah, it is somehow like the trade didn't like
No,
go the way that one analyzed. Like
no, it's not risky. You're
yeah,
not. I said if you have 0.3 lot size, you will divide it into three. So you're still having the
yeah.
same one trade, but it has different targets.
I don't know how that can,
Eh?
I don't know how that can be done.
No, what I said is that let me say that let's assume now that your lot size that you want to use on a trade, let's say that is one lot, okay? One lot,
Yeah,
okay?
sure.
So instead of opening the trade with one lot and having one target, you can open three different trades. So one trade has 0.5 lots, and that trade has 0.3 lots, and the third trade has 0.2 lots. If you add them together, you still have the same one lot. You understand? But each of them have different targets. So that even if you're not around, once you hit your target, it will automatically close for you. That's if you cannot be available to manually
Yeah,
close it.
yeah, yeah.
So that's how it works. It's not as if you are risking more. You are still risking the same thing, but you are changing or you are dividing it. That's how it works. Some people may go and do three trades and make it three lots. That is risky. That's something stupid to do. You divide it instead of multiplying it. So yeah, that's how it is, Sha.
Yeah.
Yeah.
So this liquidity program,
Mm.
are they mainly used for taking profit? Like if you want to target the event, target the break, that's when you use them, or
Yes.
you use them to enter trade.
Sometimes use them to enter trade when we are expecting a reversal. Okay, so for example, in this trade now, like I showed you guys yesterday, there was something around there that probably caused price to reverse. Okay, something here that caused price to reverse. So let's assume that we are anticipating a reversal at that place. Okay, so we can use um, these equal highs as a liquidity point for us to sell. You can see this equal high. So once price goes above them, it will have been a good sell for us. Okay, so sometimes we use it as this is called a turtle soup in ICT concept. So once it goes above it, it reverses quickly. So it tricks people that are up here buying. They are seeing higher highs, but it's just a trick to later reverse like this. Okay, so it can also be used as an entry, but is if you have a under supply zone before in the past, okay, and you now see, let's say you have a supply zone here, okay, so you want to sell from there, but when when price was coming up, when price was coming up like this, it formed equal highs and started doing as if it's coming down, okay, and you know that it's supposed to reach here. You can just anticipate this running above them, okay. You can anticipate that, and once price does that, you can sell. Okay, once price does that, it can be a good sell for you. Then by the time it comes down here, it will be in profit. If, if it does something like this, just know that the price is never going to come here like this. Most likely, it's never going to do like this. It's going to stay within this area. So this kind of trade is very, very risky, but it pays a lot. Okay, so fortune favors the bold. So it just come here highest, come somewhere like this and continue going down. So it can also be used for entry, but it's quite an advanced concept and you have to know what you're doing. So most times liquidity are just used for targets, 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 targets. Very few times we use it for entry. Do you understand?
Yeah, yeah.
All right. Okay, I'll close the class here, guys. If you have any more questions, just ask on the group. I'll attend to you as soon as I can. So thank you guys for attending this meeting on such short notice. So I'll see you guys tomorrow. Good night.
Like,
Yeah.